Is this Turkey's buy the dip moment? Turkey has pulled out of a recession, inflation is slowing down, and consumer confidence is up.
The ECB and Fed are easing interest rates, which means investors will be looking for real returns, and the equity index in Turkey is up near 28% since the end of May, which means investors have already returned and probably will continue to return.
Market reactions are showing that fears over Turkey's economy are easing. Inflation in June was at its lowest point this year and is expected to fall even more. The currency and food prices have stabilised, which paves the way for the Turkish central bank to cut interest rates.
Rate cuts will be good for Turkey because globally there is a movement towards cutting rates, and Turkey's rates will have remained very high if it doesn't cut rates. So this will allow it to both give investors real returns as well as allow the domestic economy to be unburdened by unnecessarily high interest rates.
Turkey's current account deficit has also turned around.
Yeah, the current account deficit has been historically the soft spot in the Turkish economy. For the year before this May of 2019, the current account deficit was almost $60 billion, and now it's on track to be under $2.5 billion. So that's a major improvement, and that should really bode well for investors and the greater economy.
Now, due to an uptake in tourism revenues, analysts expect to see a surplus in the current account over the next few months. Meanwhile, Turkey sprung back onto international capital markets with a bond sale on July 2nd. A $2.25 billion bond sale was more than twice oversubscribed and confirmed foreign investors' interests. Of course, there are a few factors that currently make Turkish markets attractive, like monetary easing signals from major central banks such as the Federal Reserve System or the European Central Bank. These signals led to a rise in risk appetite, allowing more investors to dive into emerging markets. According to a Turkish central bank report, there have been around $400 million in net inflow from foreign investors to Turkish bond, repo and stock markets between May and July, which marks the largest inflow since February. Turkey's bonds best performed in emerging markets in the second quarter, and according to a survey, Turkey and Ukraine are expected to be top value players in the third quarter. Turkish stocks are also currently cheap. On a 10-year average, Borsa Istanbul 100 is 30% cheaper than expected price-to-earnings ratios. Lastly, with no national local elections on the horizon for another 4 years, investors are looking forward to a period where governance will prioritise long-term economic reforms.